This is Value Investing with Bijoy. Get ready to unlock the secrets of the street.
Hello folks, I always get this question that shall I invest in mutual funds or in stocks? Many people think that rich invest in stocks and they never invest in mutual funds. This is a big myth. Let me tell you, if you see millionaires like Elon Musk, his complete wealth is from his main two stocks, which is Tesla and SpaceX. These two are businesses run by Elon Musk. So even though Tesla is listed and probably the listed shares of Tesla in the stock market is deriving his net worth and making him one of the richest. Come to Jeff Bezos, Amazon owner. He has Amazon business. So majority of the wealth come from his business which he runs, which is Amazon. Again, it is listed. So the stock price and hence the valuation of it makes him rich. Yes, if the stock plunges, Elon Musk loses 100 billion in a week, and if the stock rises up, which is I'm talking about Tesla, then he becomes 100 billion more worth in a week. So that's all about listed stocks. Talk about Mark Zuckerberg as well. So he is having Meta, Facebook. That makes him wealthy, concentrated businesses. So all these rich people have concentrated businesses. But you should not confuse this with stock holdings. Now let's come to Warren Buffett. So he invests in quality businesses. He tells buy pieces of businesses which are nothing but stocks. So invest in them and participate in the long-term wealth journey. For that, you have to be patient, buy the stock at very low valuation and then hold it for very, very long period. He's in his 90s now. He started investing at the age of 11. So if you have that patience, then you will become wealthy from just holding stocks. Though publicly he talks that if you don't want to waste your time in researching on stocks, then you should invest in low-cost index funds. So he is of the opinion that nobody can beat US and so you will get at least 10 to 15% index return. So don't waste your time on stocks. So basically to conclude, if you follow majority of the rich people, then you will not become rich because they have concentrated bets. Basically, these are concentrated businesses which they run. But then a step below, the rich people in that level, how they build wealth, I think probably we should follow them. So they use stocks to get wealthy and then to maintain or to compound that wealth, they invest in mutual funds. So mutual funds can be of various types like equity, bond-based mutual funds, short-term liquid funds based on the duration of the fund and the money which you want to reutilize from that fund. Let me further explain. The rich, what they do to get very high returns, they go for concentrated bets. Say a set of stocks, say 10 stocks. Then they get multi-bagger returns from that, which you cannot expect from mutual funds. And so once that stock goes 10x, then he has that fund, probably he is in a particular higher age bracket also, then he is not that aggressive. So he puts that compounded money into mutual funds. So there you will get 15 to 18% yearly return. So that 10x money compounds year over year and his wealth grows and he doesn't lose money against the inflation. But if you ask me, my strategy of using mutual funds and stocks to compound wealth, what I do, I have my mutual fund SIPs in some 5 to 7 mutual funds of various category like flexi cap, mid cap, large cap, small cap, international funds. So this I have diversified and then a particular amount of money which is earned from my salary goes to that mutual fund and it gets compounding. I ensure 15 to 18% return on a yearly basis and I review the mutual fund portfolio every 1 to 2 years, and if there is some underperformance, I do some switching in those funds so that the portfolio returns doesn't drop down. So I have a mutual fund portfolio built up there. Now if you have a stock market correction, so you need funds for that. So what I do, I normally anticipate a few months back the probable correction which is going to happen, which everybody can, which is not that tough, and then you liquidate that mutual fund which has already reached its probably all-time high. Then you put that money into a short-term fund, a liquid fund, a arbitrage fund. Then your money is compounded in that mutual fund through SIP. You have transferred that money into that liquid fund wherein you have 6 to 8% returns in that. Then once you get a crash in the stocks which you are having in your watch list, then you put that money directly from this liquid fund because you can immediately liquidate that fund tax efficiently and then put that money into that stock and that stock shoots up from that lower level and you immediately get very large returns in coming 1-2 years. And then if that stock is good enough, a good quality business, then continue holding that stock for a long period and this wealth flows from your salary to your mutual fund to the liquid fund, then to the stocks, and compounds over a long period and you make enormous wealth. So now you know whether you have to hold a mutual fund or a stock or a combination of both. If you ask me, the intelligent holds both mutual funds and stocks so that you compound your wealth in a sensible way. See you next video. Till then, happy investing.